Well, good morning, everybody. It's great to see you back here today. At our conference this year, as you know, we have launched a new report. You'll find copies of it at your table. It's called Bank On It, Customer Trends 2023. As our conference theme this year, Time in Transition, would suggest, these are interesting and extraordinary times for the Australian banking industry. We're seeing unprecedented levels of competition, particularly in the mortgage market. COVID-19 rapidly accelerated trends that were already well underway in terms of customer preference for digital channels. We're seeing the move away from cash and the digitisation of wallets continuing and growing in pace. Importantly, some of the shifts we're seeing are not only happening in this sector. Businesses across the economy, all sectors of the economy and government services are all shifting online as customers demand the 24/7 convenience and accessibility that comes with the digital channels. To help make sense of some of these changes in banking, the ABA has partnered with Accenture to deliver the report that we're going to spend the next session delving into. Today, as you heard from Adam, we're joined by three panellists. We have with us Hessel Verbeek. Hessel is Managing Director at Accenture, whose team led the research to develop the report. We have Alex Trott in the middle here. Alex is the Financial Services Partner at Accenture. We also have Chris Taylor, who is the Chief of Policy at the ABA. Accenture is also an associate member of the ABA, and we were delighted to partner with them on this report. Our panellists are going to take us through a few slides. Then I'm going to ask them some questions that will delve deeper into some of the results of this research. So I'll take my seat, and Hessel's going to come up.
So what we see overall as context for this report is that customers have really benefited from developments in Australian banking in recent years. So banks have strengthened their balance sheets as required by regulators. At the same time, the banks are continuing to compete on lending and deposit rates to win and retain customers. And we've seen increased investment in technology to meet regulatory and customer requirements. So first of all, when we look at capital ratios, they have increased very strongly on the back of the Basel III reforms and the financial system inquiry. In 2014, we now have capital levels that are well above the unquestionably strong benchmark as required by the regulator. And customers benefit from this. Customers need strong banks so that the banks can, for instance, meet them with hardship measures during pandemics so that banks can continue to lend during economic turmoil and so on. And at the same time, net interest margins, NIMs, have decreased significantly by 16% between 2006 and 2022. And this is not necessarily driven just by the underlying RBA cash rate. As the cash rate has gone up and down, the NIM has continued to steadily decrease. And a big part of that is, again, this competition between banks as well. So what we see when we have both capital levels going up and margins going down is that there's going to be an impact on the return on capital. So ROEs, have come down over the last 20 years as well. Obviously, there have been some disruptions through GFC and COVID as well. But overall, we've seen those capital levels come down. Thankfully, they are still at a level where the banks are meeting their cost of capital and are able to continue to invest. And invest both to meet regulatory demands and customer demands. So finally, what we can see is that the investment in all things technology over the last 15 years has increased eightfold. Now, that can be investments in digital banking, that's investment in payments infrastructure such as NPP, investments in CDR, mobile wallets, but also, for instance, new systems that better meet regulatory requirements and lower the risk as well. So that is the setup for a strong and vibrant banking sector. So hand over to Alex.
Good morning. And thank you, Anna. And we've been very pleased at Accenture to partner with the ABA on this report. There's been plenty of data over the last few days, and for those of you that were here last night, I think the excitement of the demographic data certainly all came through. And what's really interesting, I suppose, is the data that we've got and the data that we've seen. It's all related. It's all around consumers. It's all around what they're doing and where they're going. And as Anna said before, this isn't just a banking trend. This is a trend around, consumer move to digital. It's something obviously that we know was accelerated through COVID, but actually hasn't gone back. Actually, the trends have continued, and the trends were happening before. There was some acceleration. And actually, as we can see now, in banking, 99% of all customer interactions with their banks are through online app, through digital means. And that is a massive, it's a massive amount. What we're seeing is, if you look at then channel by channel or touch point by touch point, online app, they continue to grow. This isn't just about a migration of, I used to do one transaction here and now we're moving a single transaction there. Actually, the number of interactions, and therefore the interactions in total, because of the convenience, because it's easy to log onto your app and check what you're doing and those things, increasing over time, and therefore those connections through that are increasing as well. And as you can see, there's plenty of data in the report and different sort of slices and dices, but new technologies as they're coming through, chatbots or whatever, obviously starting from a low base, but again, the take-up of this has been very, very strong because it's down to the type of interactions, it's customers getting the type of information that they need at the point at which they need it. And I suppose what we've managed to do here is also combine the transaction data that's actually happened, so the actual number of transactions in total, then with customer feedback as well. So the Accenture consumer survey around FS, we looked at 59,000 consumers around the world, a large proportion in Australia as well. And we saw that fundamentally, they're using more digital, but they also like that more as well. So actually the satisfaction levels with online, with digital interactions is higher as well. And I think what we therefore see from that is, just a continued sort of self-fulfilling prophecy around, if I like doing it in the same way, continuing to drive up the digital transactions.
Thank you very much, Alex. As Alex had mentioned, the Bank On It report shows a dramatic shift from customers to digital channels. 98.9% of transactions are now happening digitally, and that number increases to 99.3% when you include phone banking. At the same time, cash transactions have declined from 70% of all customer transactions or customer payments in 2007 to just 13% in 2022. Now, this shift has been occurring for a number of years, but it has been dramatically accelerated by COVID. And once online, many customers have found that the 24/7 availability of digital channels has been a convenient way for them to bank. The increase in digital use has been matched by a decrease in the use of traditional bank branches. The report shows that since 2019, there's been a 46% decline in customer transactions at branches. Interestingly, the declines are similar between both metro and regional areas, with a 48% decline in metro and a 42% decline in regional areas. So what are the implications of this? Well, it's two things. Firstly, an increase in technology spend. As Hessel had mentioned, banks' investment in technology and IT has increased from $3.5 billion in 2005 to $28.5 billion in 2022, which is an 8-fold increase. At the same time, banks have been reshaping their branch networks, and this is to be expected when branch transactions have nearly halved in the last 4 years. Even when branches are closed, many banks are now still offering face-to-face alternatives, including through locations like Bank at Post. The report shows that when participating banks have closed a branch, 98% of these closures were within 3 kilometres of either another branch of the same bank or a bank at post location. Now, despite these changes to branches, Australia's branch density still remains very high by international standards. Australia has 24 bank branches per 100,000 adults, which is higher than the 2 most comparable OECD countries by urbanisation, including New Zealand with 18 branches per 100,000 and Finland with just 6 per 100,000. Australia's branch density, even after the changes occurring through COVID, is still 1.4 times the OECD average. And these numbers do not include the bank at post locations. So the theme of this year's conference is time of transition, and especially in relation to bank branches and the increase in digital transactions, there are a number of items that are transitioning as customers have shifted to digital channels.
And thank you, Chris. And as Chris has mentioned already, there's been a big change, not just in the branches or the channels that customers use, but also how customers like to pay. So there's been an overwhelming shift from cash to cards in the last 15 years. So if we're looking at those proportions, there's been really a flip where cards now represent 75% of transactions by number of consumer payments and 60% of value. And similarly, cash is down now to 6% of the value of transactions. And we did not represent checks on this chart because that would be a decimal on the overall number of transactions. So it's not just the use of cards, it's also how customers use cards. Cards are used differently, whether it's directly in store or whether it's a remote payment entering card details, or whether it's via mobile wallet or in app, and that is changing significantly. And a big driver for that has been the growth of e-commerce. So e-commerce, since the start of the pandemic, has almost doubled in terms of its proportion of overall retail sales. And therefore, we're seeing many more of the payment instruments that are more geared towards e-commerce come into normal life as well. And mobile devices, now almost account for half of all online payments. And most spectacular out of all of that is mobile wallets. And this is something that has been highlighted, for instance, in the media release for the report as well, where while off a low base, the growth has been nothing but spectacular, with a 650% increase in the number of registered cards in the last 5 years, but an over 8,000% increase in the number of transactions and a whopping 12,000% increase in value. So while this is still relatively small in the overall scheme of things, it is showing us that customers are leading the way and customers are interacting not just in banking but in all aspects of life differently, and the way how they go about choosing bank channels and choosing payments follows that trend.
Okay, well, it's a very data-rich report. Hessel, might just tell us a little bit about how you went about compiling the research and some of the data sources that were used to bring us this picture.
Yeah, thank you, Anna. Well, what we really wanted to do is bring a comprehensive view and provide an unique view of this transition in banking. So we started, first of all, with the widely available regulatory data. And we've got very rich data, especially from APRA and RBA. And that really was the baseline for the report. What we then did is we tapped into Accenture's research, especially a global financial services consumer study, which we conducted last year. And that allowed us especially to see where Australia compares internationally, as well as get really rich customer satisfaction data. And then there was still a couple of things where we wanted to get additional insights, and that's where we used a survey with ABA's largest member banks as well. And that allowed us to get really rich data where we looked in very large data sets over a period of 4 years, where we looked at transaction data, but also, for instance, mobile wallet usage data, and that's data that was not available from any other source. So by combining the three, we think that we've got a really rich and compelling picture.
Yes, that data request to our 4 largest banks gives us a picture, for example, on mobile wallets that no regulator or any other authority collects, and for the first time we've been able to get it in a apples and apples way that gives us a much stronger picture of exactly what customers are doing regardless of who they're banking with. Alex, what do you think the data in this report tells us about the strength and the competitiveness of the Australian banking sector?
I think there's a couple of things around both of those. So we heard a lot yesterday around the strength of the Australian banking sector, and I think that's really it's reinforced through some of the some of the aspects around capitalisation and other things that were shown up front. But I think it shows also from a consumer point of view, in terms of whilst satisfaction is actually high. With banks, and actually, a number of the sort of dimensions of that digitisation and satisfaction with that as well. But competitiveness really comes down to what consumers are doing, and do they have a choice, and do they have the ability, what are the barriers to switching and those types of things. And the data again showed that actually for transaction accounts, for cards, and for a number of the different products, there was new acquisition of those products. So customers were buying new products. Around 16% in the last year had actually bought a new one of those products from a different financial institution. So I think what it's showing is, consumers are, they're not, switching all the time, and we know that's the case in banking anyway, because there are obviously some convenience aspects to that as well. But actually, the market is competitive, and people are looking around for the right offer. They're looking for the right service, and they are moving and choosing those products.
And Chris, given these trends, I think one of the staggering numbers in here is that 98.9% of all customer interactions are now happening in some form digitally. One of the challenges for the sector is investing in all of the things that the new things customers are wanting, keeping it safe, while at the same time maintaining some of the legacy infrastructure. And how are you seeing, or given your role in policy in the ABA, some of the issues around keeping that face-to-face opportunity for those customers for whom that's still very important?
Yeah, no, it's an excellent question. I think there were 3 points of data that came out of the report that really struck me. The first was not just the shift to digital, but the reduction in transactions happening in branch. So in the space of 4 years, the number of transactions almost halved in branches, which means customers are doing banking and things they might have otherwise gone into a branch for quite differently. I think the second piece of data that really struck me was the international comparison around OECD averages. There's always a lot of talk about what's happening with branch networks in Australia, but when you benchmark it against international comparators, 1.4 times the OECD average really does put in context. The third piece that I also thought was quite interesting is 98% of those branch closures still having a face-to-face alternative within 3 kilometres. And what we're seeing is customers are doing more and more online, but using branches quite differently for more complicated transactions, for sales. And I think there'll be an ongoing need for branches and for those type of interactions, although over time, with using technology, more of that will probably shift to digital as well.
Lots to think about. The report's there. I hope that you take the copies that are on your table, that you find the information helpful in some of the discussions you're having within your own banks, because what you'll see that pretty much what's happening in your bank is probably happening right across the sector. and we hope that this is a piece of work we'll continue to update so that we keep it relevant and fresh in ways that are appropriate. So can I ask you to thank our panel? It's been great to work with Accenture, and I think this does put a lot of kind of flesh on the bones of some of the things that we knew were happening, but we can now quantify in a much more rigorous way. So thank you.
Thank you.